the stock market is going to crash. That's not a guess. It's just a fact of life. It's happened again and again throughout history, and you can bet it's going to happen again. But here is the secret that most people do you and get. A market crash doesn't have to ruin you. In fact, if you play your cards right, it can be the single biggest financial opportunity of your entire life. I've been in the investing game for over 35 years. I've seen it all: Black Monday, the dot-com bubble burst, the 2008 housing crisis, the 2020 pandemic crash. And guess what? Every single time, I came out on the other side, wealthier than I was before. So today I'm going to pull back the curtain and show you exactly how I get ready for a crash, how I protect my portfolio when it hits, and how I turn those moments of mass panic into real long-term wealth. Every market crash follows the same script. It starts with euphoria. The good times are rolling. Prices are shooting up every single day, and everyone feels like an investment genius. Your coworker who couldn't tell a stock from a bond is suddenly calling himself a day trader. Social media is just an endless stream of people showing off their massive gains. That, my friends, is when I start to get nervous. I saw these exact same signs right before the crash in 2008. Everyone was spending money they didn't have. Banks were handing out loans like they were Halloween candy. People were taking out second mortgages on their homes just to buy a new car or go on a fancy vacation. From the outside, the economy looked unstoppable, but underneath, the foundation was full of cracks. And think about it, more recently, remember when people were dropping millions of dollars on JPEG images called NFT? That kind of craziness is always a signal that we're at the top of the mountain. So when I see that level of overconfidence, I switch into protection mode. I don't panic, but I do prepare. The first thing I do is lower my risk. I stop chasing those huge, get-rich-quick returns and shift my focus to steady, compounding growth. But when the market gets overheated, I save even more than that. In a high-interest savings account, that cash becomes my ammunition, my war chest, for when prices finally drop. And finally, I make sure I am diversified. I never bet everything on one company or one industry. This way, if one part of my portfolio takes a nosedive, the rest helps cushion the blow. It's the key to being able to sleep well at night, no matter what the market is doing. But eventually, the party has to end. The music stops. It usually starts slowly at first, few down days, a bit of uncertainty. And then, all at once, the panic spreads like wildfire. Stocks plummet. The news headlines are screaming disaster. One of my favorite stories is about the legendary investor Peter Lynch. He once bought shares in a company that tanked, falling all the way to $10 a share. Most people would have sold in a heartbeat, but he didn't. He held on because he knew the business had no debt and strong fundamentals. A couple of years later, that same stock rebounded to $50. That, right there, is the power of patience. When the 2008 crash hit, my own businesses were in serious trouble. Customers stopped spending almost overnight. My revenue was cut in half. I could have freaked out and sold everything, but instead, I started looking for opportunities. I noticed that dollar stores were popping up everywhere. People still needed to buy essential goods. They just needed to buy them cheaper. That showed me exactly where the money was moving. So while everyone else was running for the hills, I started buying. Eventually, every crash finds a bottom. Slowly but surely, confidence returns. Businesses start hiring again. Prices stabilize. The recovery begins. I like to call this the Phoenix phase, because the market rises from the ashes, often stronger than before. It's just the natural cycle of things. After the 2008 collapse, it took a few years, but by 2012, the economy was roaring back. The people who kept investing during the downturn were miles ahead. The ones who sold everything were stuck on the sidelines, watching in regret. That's when you start to rebuild. You keep investing regularly. You rebalance your portfolio. As Warren Buffett famously says, be fearful when others are greedy, and greedy only when others are fearful. So, how do you make sure you're ready for the next crash? Start by understanding your own risk tolerance. If you know you're going to panic and sell everything when your portfolio drops 30%, then you're investing too aggressively for your own good. Build a balanced portfolio that lets you sleep at night. Make sure your emergency fund is fully topped up. Automate your investments so that your emotions can't get in the way. And remember that long-term success isn't about predicting the future. It's about being consistent. No matter what, market crashes are never fun, but they aren't the end of the world. They're a reset. They're a chance for smart investors to buy great companies at a huge discount. They are a test of your patience, your discipline, and your mindset. Every single one. So the next time you see headlines screaming market in free fall, just take a deep breath. And keep learning, because the next big opportunity is already taking shape, and this time you'll be ready for it. Thanks for watching.